In a market obsessed with building ever bigger AI models and chasing quantum dreams years away, founders need focus. Emily, you're IBM's global head of venture capital, backing fit-for-purpose bets built for real-world impact, from open source AI to quantum software. You meet about 800 startups a year, but only back around a dozen. What makes a company rise to the top of that list for you?
We're extremely selective. And we're selective for a reason. We're a strategic investor. We deploy something called our Capital Plus model, and therefore we really want to make sure there's strategic alignment. What we do is we evaluate them against 5 key pillars. There's team, again, very important as we
That one
talk.
seems like it would be the hardest one, though.
It it is and it isn't, right? You can really what you look for is you look for people who are got deep technical expertise, but it's not just about the people. It's also about what are their partnerships, who's on their cap table. You want to really evaluate the entire picture. And then you look at financial discipline. And financial discipline is all about, do they understand their business model, right? Do they have sound financials? So you look at all of these things combined and then you make an assessment. For us, we really doubled down, of course, on team, as you just said, but also strategic alignment. That's incredibly important to us because we want to look at what are the long-term goals of both IBM and where we want to go in our direction, but also what's going on in industry, right? We want to make sure as a strategic investor, we are investing in the right companies for where we want to go.
Everyone's chasing AI right now. Some call it a bubble. You're still making big bets in the space. What do you say to the skeptics?
There's a ton of money, don't get me wrong, going into investing right now. Let me give you an example of that, right? The first half of 2025 was the entirety of 104 billion in AI for all of 2025.
And that was just AI alone.
That was AI alone. And that was the entirety of 2024, right? So you're going to continue to see huge investment, but this is where it's going. The other thing you're starting to see is an enormous amount of adoption. And that's incredibly important because that adoption is showing people are really starting to use it. You have, over the last few months, you've seen a jump from 26% to 43%. That's huge, and it's only going to grow, right? So I
Can
think
it grow at that rate, though, still?
it's going to. I absolutely do, because people are starting to see the return on investment, right? They're starting to see the need to use this to stay up on time. You don't want to get left behind. I always tell companies that is, what's your strategy? How are you dealing, most importantly, with data, particularly unstructured data? This is why I invest in a company called Unstructured, because 80% of data is unstructured data. You have to deal with that. It's become an imperative, and not just, hey, something strategically you want to do. You've got to deal with it.
You've talked about fit-for-purpose models rather than these giant frontier models. Why do you think smaller targeted AI will win in the enterprise?
I really strongly believe in this idea of having a hybrid kind of model strategy, right? It's really important. This is another huge shift that we're starting to see, where people are going from having one model. Now enterprises at, 85% of enterprises have 2 or more models. It's incredibly important to both have a variety of models that you can choose from, right? Kind of that fit for purpose strategy. It allows you to be more open. It allows you to be more agile. Having an open architecture ultimately makes you more resilient. And you need that as you kind of determine which model is best for your workloads.
IBM's bet on open source like Hugging Face has really paid off. What's the commercial edge in open versus closed models for business AI?
The key here is ensuring, as we've talked about, right? It's ensuring that you have an open architecture and that you are able to integrate in and you're not locked in for vendors, right? That's hugely important. So you need to continue to have that open strategy in order to be successful, right? And you're going to continue to see people adopt more models, adopt the right model for them. The other key trend that we are starting to see is people want to ensure that they have specific AI for what they need, right? It doesn't matter what industry you're in. You're seeing this across industries, right? Everyone's doubling down on, if my KPIs are different than your KPIs, right? I want to make sure that my AI and my models are reflecting what I need, right? That's why reinforcement learning is something you're going to start to see as a big trend in 2026.
Quantum computing is another big IBM focus, but it's still early. Why invest now? And what kind of quantum startups are actually investable today?
First of all, we're building the future now. And we fundamentally believe that quantum is the future. It's the next level of computing. Think about it. We had mainframe, we have classical AI. Now we have quantum, right? So we are building that now. But
Will that surpass everything else that's come before?
think about it as, don't over-engineer it. You want to decide for your workload, you need to decide, do you need classical, right? Do you need quantum? That's the determination you're going to have to make for what you need. But what I do think is incredibly important right now is we build an ecosystem. You're seeing a ton of money flowing to hardware, right? But you're really not seeing that many software companies or companies that are building algorithms on the market looking for capital.
You're meeting hundreds of founders a year. What are they most worried about in 2026?
I think founders now are constantly worried about driving revenue. It's really important showing that progression. What's keeping them up at night is working with procurement, right? And getting contracts through. Where you show real adoption, where you show real success is going from a pilot to a contract. And then from that contract, starting to go across BUs or deep into additional workflows. That's what you want to see as investors. That's keeping them up at night. And it's also me as an investor keeping me up at night, because one of the key things I evaluate companies on are, can you convert to actual contracts?
A lot of founders think corporate VCs move slower or have too many strings attached. How do you make sure IBM Ventures isn't one of those?
First of all, let me just make a plug for corporate venture in general. So
Kind of has a bad rap.
it has a bad rap, but it shouldn't, because at the end of 2024, it had its big moment in the sun. And in 2025, they absolutely thrived. I think we're going to continue to see that throughout all of 2026. But if we look back at 2025, right, they may not have been in as many deals as they were in 2024, but they contributed to a significant amount of capital, to the tune of 62% of all the capital that was deployed. So you got to look at that. So you've got to give corporates their moment, but they have you've got to find the right corporate for you. And what I mean by that is you have to ensure that that corporate is actually driving opportunities for you, it's driving revenue for you, it's driving success. Your missions are aligned, right? So when missions are aligned and there's a lot of conviction and it's strategic, you will be shocked at how fast we can move.
Okay, I'm a founder with term sheets from IBM Ventures, Sequoia, and Andreessen. Why should I choose IBM Ventures?
You shouldn't exclusively pick IBM Ventures, right? That's the beauty of what we do at IBM Ventures, is actually we don't lead deals. And I think a lot of people don't know that about us. We actually co-invest along top tier VCs. So in Andreessen, for example, we actually co-invested in Hugging Face, right? And so what you want to do is make sure that you are, one, finding a great term sheet. And I always tell people, don't chase term sheets, right? Make sure you've got the right people on your cap table who are going to drive value for you. And that may be a traditional top tier VC. It absolutely should be. We believe that. That's why we co-invest alongside them. But it should also be a strategic.
Let's just focus on those misconceptions again. What are the biggest misconceptions when it comes to companies like yours? Because a lot of people believe that it's just to plug a hole that they have for servicing their existing clients.
The biggest misconception, I would say, is that they're just going to walk away, right? That it's going to be at the whim of the business leader and they're just going to walk away. But we don't look at it like that. We look at it, these are long-term investments. We look at the long-term strategy, where we're going. I really want to make sure that all of my BUs, my business units, are involved, right? That they understand where we're going, why we're investing, and we create these roadmaps together of what's important. If you do that, then you're going to create long-term sustainable relationships, as opposed to these quick kind of hits, as you're saying, fill the gaps, right? Part of what we do though is we instead of we look at this buy versus build versus partner model, right? You want to make sure that you are not investing in competitive product, because that doesn't help anyone, right? But you want to invest in product where you're enhancing your own capabilities, or you really are filling a gap, but not a gap that you intend to build yourself, but a gap that where it just makes sense because this company is so far ahead of the market, right? And you can create that better together story.